Index funds are among the safest and most affordable ways to invest in the stock market. Unlike the old days, where investors needed to individually pick and choose the businesses they wanted to invest in, a proposition that took a lot of time and could easily go wrong if investors misread the markets or failed to build enough diversity into their portfolios, index funds allow you to invest without having to pick and choose. Instead of a more traditional investment into a single company, investing in an index fund is more like investing in the market as a whole. Famously, Warren Buffett touted index funds and recommended investing in the S&P 500 as the best investment option for regular people as recently as May 2022. But while index funds are generally a safe and practical way to invest, that doesn't mean that all index funds are created equal. Just as importantly, the market in 2022 is in a very different place than it was before the pandemic struck in 2020, which means that the best funds to invest in might have changed from previous years. Let's take a closer look at the top 5 best index funds for 2022, what makes them such good options, and what kind of funds they are. Number 1. Fidelity Zero Large Cap Index, FNILX. The Fidelity Zero Large Cap Index Fund is one of the best and most affordable funds you can invest in anywhere. The zero in the name comes from the fact that it's a zero expense fund. For every $10,000 invested per year, there is $0 in expenses. Primarily designed for people who already have accounts with the investment company, Fidelity's Zero Cap Index is similar enough to the S&P 500 for the differences to be mostly academic. However, by not using the S&P 500 name, Fidelity avoids licensing fees for themselves and their investors. This fund, as the name would suggest, tracks Fidelity's large cap index. However, like many of Fidelity's specific indexes for their customers, this index closely mirrors one of the other big-name indexes on the market, the S&P 500. That's why we said the differences here are mostly academic. Are the indexes identical? No. Are they similar enough that they almost always perform similarly over time? Yes, some minor differences between the funds are expected, but overall, this is an incredibly beginner-friendly option with low barriers to entry and good opportunities to profit. Number 2. Vanguard Total World Stock ETF, VT. The Vanguard Total World Stock can't meet Fidelity's zero expense ratio, but that's not a surprise considering more index funds have at least a modest expense ratio. Vanguard's TWS is a little more expensive than some of the alternatives on this list at 0.07%, but that's still a reasonable expense ratio for most purposes. The most significant advantage of the VT is that it's a large fund that includes a diverse portfolio of different companies and requires no research into US market versus international markets, since the fund consists of a combination of both. With over 9,000 companies represented in the fund, there's little chance of downturns in individual sectors bringing the whole fund down, unlike some smaller funds that are more industry specific. Number 3. Schwab S&P 500 Index Fund, SWPPX. The Schwab S&P 500 is one of the best-known index funds in the world, and can trace its history back longer than many of the funds on this list. That's important because if you're looking for a proven fund with a lot of data backing its effectiveness and that performs predictably in different kinds of market conditions, this is a good option. Of course, while the Schwab S&P has a lot of history behind it, you don't need to do much research to know that it's a solid option for investment. There are some drawbacks there, but this is an investor-trusted fund for the most part. For one thing, the Schwab S&P 500 is a little smaller than many index funds, but the fund's overall performance isn't significantly more volatile than other index funds. That's important to note because one of the problems with small indexes is that they can often suffer from economic downturns more significantly than larger funds because there are fewer companies to help protect the fund. Number 4. Shelton NASDAQ 100 Index Direct, NASDX. Looking for a smaller fund that's still relatively representative of the market? The Sheldon NASDAQ 100 is a reasonable option. This fund eliminates financial companies from the index, which means that you aren't going to see compounded downturn from a financial company's fortunes changing when the market goes through a correction. However, it's limited to the top 100 companies in the market, which is largely a group of tech companies at this point. That's important to note, because the Shelton NASDAQ 100 is slightly less diversified than some other companies. Normally, that would be a weakness in an index fund. Still, tech companies tend to be somewhat sheltered against market correction unless tech as a sector has problems. Like other NASDAQ-based indexes, the Shelton NASDAQ 100 Index Direct is a good and relatively reliable index fund with reasonable expenses for its profitability. And unlike other indexes, this index is less subject to the whims of the entire market, instead focusing on the top performers. Number 5. Vanguard Total Stock Market ETF, VTI. If you're looking to invest in an index fund that's literally the entire market and tracks the ups and downs in market trends, there aren't many funds that are gonna work better than the Vanguard Total World Stock. As the name would imply, the Vanguard Total World Stock Index Fund tracks almost every traded company. It started trading actively in 2001 and has performed as you would expect since the fund launched. This index fund also has a low expense ratio of just 0.03%. So, for every $10,000 traded annually, this fund would have a cost of $3 total. Overall, that's one of the more generous offerings, aside from Fidelity's line of zero index funds, one of which we've already discussed.